Welcome to the next lesson of the free Ultimate Credit Spreads Trading System course. This will walk you through how to be a profitable credit spreads trader. If you don't yet have this free guide and handbook that we're walking through that shows you strategy step by step and every single rule you need to follow to be profitable, then click down in the description below and you can get free access. Just put your email and you'll get immediate access. Anyways, let's jump into the next strategy right here, the short play strategy. All right, so this comes in during bearish markets. This is how we take advantage of a market downturn without having to short. For instance, if you ever heard of market, like for instance during the 2008 housing crisis or something like that, when people were shorting the market, yeah, that's not something that everyone can do. It requires margin, it requires a lot of leverage, and again, it's just not as liquid. So again, if you're trying to take advantage or protect your account during bear markets, this is how you do it in a cheap and easy way. All right, first off, let's look at a visual understanding of what this is. When the stock is below the bottom blue line, we are in a bearish market. We are trending down. You can see here we're trending down. So that's how this works. Again, this is based on the Bollinger Band that you can see here if you haven't watched previous lessons when we set this up, which I highly recommend you do because these lessons are amazing. But if we go into here, the Bollinger Band is going to be, or simply it's a Bollinger Band where the moving average is set at 200 and the standard deviation is set at 1. Okay, therefore, once we're down below this bottom blue line, we have fit and matched the criteria to enter this trade. So let's look at it further. All right, if we're looking at the criteria again for this trade, it's below that. Next, we need to actually structure this credit spread. Now again, as we were discussing, the prior two strategies that we discussed were put credit spreads. Why? Because the market is generally bullish when it's in this type of phase, so we want to use put credit spreads because those make money when the market goes up. However, now that we're trading bearish approach, we want to switch it to a call credit spread because call credit spreads make money as the stock goes down in value. So that's why we're going to put on call credit spread. So how do we structure this? Well, like put credit spreads, how we go below the strike price, call credit spreads go above the current stock price. So we're going to go 104% of the current close price. So let's say we're trading right in here down below this level. The stock's close looks like 388.55. So if that's the case, 388.55, then we need to go 104%. That's going to be 1.04. Then we're going to round it to the nearest whole number. So that gives us 404.092. So again, we're round to the nearest whole number. That's 404. That means that to structure this call credit spread trade, we're going to sell the strike price of 404 and we're going to buy the 405. And that is how we're going to structure our call credit spread. Again, as long as the stock stays below 404, then we're going to make money. And again, if it goes further away from that price, we'll be able to close out that trade early using one of our early exit rules that we'll cover in a lesson here shortly. So this is the short play strategy, and this is how you can take advantage of downtrending markets. So far we discussed about uptrending markets, sideways markets, and downtrending markets. These are all trend following approaches. Why does trend following approaches work so well? Because again, you don't want to bet against strength. You don't want to bet against momentum. If you've ever seen a surfer, if you ever surfed for yourself, guess what you don't do? You don't try to surf straight into a wave that's coming at you. You're not going to win. You turn your surfboard to go with the wave and then you ride that wave down. That's exactly what we're doing here in the market. We're understanding where the wave is going and we're following its strength, and that's how you profit in a consistent and easy way. And so again, not only that, we no longer spend hours charting because we just look at, all right, is it below this line? If so, we know we're going to check out and follow the short play criteria or the setup. If that's not true, then we're going to do a bullish one or a neutral one. Anyways, that's all we get to do here. Now, if we put on this trade and we use the expiration date, which is a bit shorter, it's going to be 9 days. So that means we take the current day that we have looked at this. So for instance, we looked at it around, I forget what day here, but the 388.55 price day. We take that date, whatever that day is, we add 9 days, and then we round up to the nearest next Friday, and that's how we get the expiration day. We plug in all these details into our broker, we set up the credit spread trade. If we can collect the minimum credit, which means that we're going to be able to profit long term with that credit, that's coming in the next lesson after the strategy lessons, which can also be found at the bottom of this document. Then we are good to go. We place that trade and we profit. Now, what are we looking at for our average stats on this strategy? We're looking at an 84% win rate. We're looking at a 5% annualized return. Why is this lower than the previous ones, even though the win rate is roughly the same? That's because there's not many occurrences. The market drops a lot faster than it rises. You can see here it rises for this long, but it dropped in this short amount, or in this short period. It dropped here, and it's been rising ever since. So because it doesn't drop often, and when it does, it drops quickly, we don't have a lot of occurrences. So this strategy is very profitable, and it works, but it's not something that you'll see come up a lot. This only happens in bearish markets, but if we're in a bearish market, this is a great strategy to use to take advantage of it. Anyways, guys, if you're trying to become a better credit spreads trader, please continue to watch this course by smashing the subscribe button and the bell notification to get access to the next lesson to come. All right, guys, see you in the next lesson.